Good morning, Steve Reed with the morning grain comments. Well, markets are trying to retrace some of the steep losses on Friday because of the concern of this new South African COVID virus strain and that it's spreading very quickly. Right now, the hope is that the markets feel that maybe this particular variant is not going to be as bad as originally feared. Stocks are up, crude's up, and most of the grains are higher. As far as weather is concerned, U.S. remains dry, and we would expect maybe the crop conditions for the winter wheat to continue to decline today. Europe has some frequent showers over most of Europe, while the Black Sea is fairly normal today, but second week of the forecast looks like it's going to get turned much colder. Australia gets a break this week from the rain. But starting next weekend, they'll be back with shower activity, although maybe not as heavy as it has been in the past. South America, central and northern Brazil is fine. We're starting to see a forecast over the next 2 weeks of drier conditions in southern Brazil, Rio Grande do Sul, and eastern Argentina. So that's very La Nina-ish. We're also seeing some more rains in the southwest corner of Canada, and also the Pacific Northwest, and that's also very La Nina-ish. Tomorrow we might get an update in the 30 and 90-day NOAA forecast, and we'll see if they want to stray away from their normal temps, maybe even warmer temps across the U.S. Midwest to something colder than normal, which is our weather guide's forecast. As far as the beans are concerned, again, when we start looking closer to $13 beans, that seems to be overpriced. We did find support at $12.40 after the debacle on Friday. I think crush margins here in the United States are favorable, but right now we're running behind the pace to meet the USDA's export goal. So we would expect on December 9th a chance that they could raise the soybean carryout. As far as the wheats are concerned, they're up. On Friday, the Minneapolis wheat gained on Chicago and KC. I think there is a concern about the availability of high-quality milling wheat globally, and that should support the Minneapolis futures again. KC and Chicago March, people are suggesting end users get coverage for 2022 because we could have lower Russian and European supplies until their next harvest, higher wheat prices, which either one or two things. Number one, could rally the wheat futures, but even maybe more importantly, could shift some import demand to the U.S. And finally, in the corn market, again, most people are beginning a little concerned that our export pace is running behind the pace to increase our export numbers and lower our carryout. We do think that the USDA is going to have to raise ethanol 100 million bushels, which would drop the carryout. In corn, the big story is next year. What if acres are down? What if farmers use less fertilizer? What if the crop is smaller? And what if we get back some of that export demand out of South America? So the corn market is very well supported at these price levels, and eventually I think trades over $6. As always, these are my thoughts and not those of ADM Investor Services. Have a safe and profitable trading day. And remember, always treat people like you yourself would like to be treated.